I would now like to review Chapter 18. And the first thing I'd like to go over with you is Exercise 18.1. And this is really a review of comprehensive income. And the following is from 2021 Annual Report of Kaufman Chemicals, Inc. And they give us the statement of comprehensive income, and that's the income statement extended where we start at net income, and they give us the net income for 3 years. And they then detail out the other comprehensive income amounts. And the first is a $34 million net unrealized gains on available for sales investment net of tax. And they actually give the amount for each year. And there's other comprehensive adjustments. And again, they give us the amount each year. So the total comprehensive income for each year is given to us. And what you have to remember, the amounts we see on the income statement are those amounts that occurred in the current year. So in 2021, in the current year, the unrealized gain on available for sale investments was $34 million. It's just the current year. Now, other types of changes, which they just gave us the term other, there's 3 other types of comprehensive changes in income. And the second one is the gain or loss from the amendment of post-retirement benefits. And what they're referring to here, think of a pension plan that you start working and your pension would be based on the number of years you work for the company as well as your salary. Well, there are projections into the future as to what the liability will be, because it really is a long-term liability, for when they have to pay the pension, because this is amounts that have accrued in the current year and will accumulate until they retire. So in this case, because it's projections and it's actuarially determined, there sometimes are adjustments, and those adjustments, instead of going through the calculation of net income, they are adjustments in calculating comprehensive income. There's also deferred gains and losses on derivatives, as well as adjustments for currency translation. Okay, so this is basically what I just went over with you is the same outline to calculate the statement of comprehensive income, and it provides the detail, which the starting point is net income, and then we could have one of those 4 or all of those 4 adjustments to calculate comprehensive income. And note that the comprehensive income as presented is net of tax. Now, we also studied that what is comprehensive income? Comprehensive income is calculated using non-owner transactions. So when you look at the balance sheet, you can see Kaufman reports accumulated other comprehensive income in its balance sheet as a component of shareholders' equity as follows. So we know the components of share equity. We know the components of shareholders' equity. So the common stock account and the additional paid-in capital account are the results of exchanges in ownership. People who own stock purchase the stock from the company, and the common stock and the additional paid-in capital has that on their balance sheet. And retained earnings is any dividends that are distributed to the owners. So they are part of equity, but they deal with the ownership. whereas the accumulated other comprehensive income are exchanges and transactions that are not related to the owners. They are non-owner related. So that's how you can, why they defined comprehensive income as exchanges with the corporation to non-owners. Now, what I want to do is then go over the requirements. And the first requirement, what is comprehensive income and how does it differ from comprehensive income? I have just gone over. And how is comprehensive income reported in the balance sheet? And what I want to point out to you is on the balance sheet, it says accumulated other comprehensive income. So it is the accumulation. So in 2021, there's $107 million of accumulated other comprehensive income. That is not the transaction that just happened this year. This is the accumulation of comprehensive income adjustments. And we'll see how that ties out. In 3, why is Kaufman's 2021 balance sheet amount differed from 2021 amount reported in the disclosure note? And the reason it is different is basically what happens is if you start with the beginning balance for 2021, it's 75 million. And if we go up to the actual comprehensive activity for 2021, you can see I pulled down the unrealized gain for $34 million, and the other, a subtraction of 2, which actually explains by calculation how the balance sheet is the accumulation of comprehensive accumulation of a comprehensive income, where the balance sheet is just the annual activity.